Good day, all. Ira Epstein, and we're here with your financial market wrap-up, and this is for Tuesday, the 11th of February, 2020, about 4:35 in the afternoon. Well, I stuck my neck out yesterday. I do it all the time anyways. And I was looking for a Tuesday reversal, and boy, I got it in a lot of markets. I mean, the Dow did get up to 29,395, set back 16 on the close. The NASDAQ, I had my doubts about it intraday. I was going, wow, it's taking so long. I got what I wanted in the gold and the silver, the reversal. The dollar dropped down against most currencies. Bonds and notes gave up some of theirs. We were up in the crude and the Brent, and we got a rally today in the nat gas. So all in all, I think it can be called a reversal day, not a trend reversal. We had a Tuesday reversal, and that's where that ends. So now we have to go to the charts. But before I go there, I want to remind you, when you look at Bitcoin rallying, there's a reason it's rallying, which ties in with the stock market. You want to know what that is? There's going to be less Bitcoin. It goes into the halving, starting the April-May timeframe. What else? You do realize in the stock market that as you keep these interest rates low and you get corporate buybacks, the earnings per share when you buy back stocks keeps a market well buoyed. And that buoyedness is showing up here. What do I mean by that? Well, company comes in and they do a $100 million buyback. They can go out and borrow money very cheap. Stock value is going to go up. You got 100 million less shares for the same basic earnings. Think about what I'm just saying there. You've got to start understanding some of these finances that are work. Am I making it overly simplistic? Intentionally so. But I want to give you an idea of part of what's going on. And because interest rates are so low, the question is, how long does this go on? We saw Fed Chair Powell talk today. It certainly looked to me like he's got the markets back. He also brought up the factor that he still thinks that come the end of April, the repo market that they're supporting might not need quite as much government support. We'll see. That's what he says. In looking at the weekly area chart of closes, you can't argue with market success. You're up 32 points. This is a all-time high weekly close, but we're not at the end of the week. We're at Tuesday, but I'm just showing if the market were to end where we're at. The other part that I'm looking at is this market's trying to break out to the upside, got thrown back a little bit today, as you can see. So let's take a look at swing lines. They are higher lows, higher highs. That's bullish. What would break this pattern? Taking out the 3303.50 level. That would break the pattern of higher highs, higher lows. Where are moving averages? Right there. So that's where the market's been fighting a battle. It had tried to go down, flipped itself over almost equal, by the way, got itself over that, and we'll see if the market can still fight at that 18-week average of closes. But to get there, you might break the trend, so be a bit cautious. That number is moving to the tune, though, each day of about 3 points, 3 to 4. So it's going to come in tomorrow a bit higher than this number, probably closer to 3307 or 08, at least based on what I'm seeing here. Where's the resistance? Right up at the upper Bollinger Band. So we have resistance at that upper band. The trend is up, the bias is up, and momentum is overbought. You heard me, overbought. In order to change from overbought to what we call locked in or embedded, the market has to have both the blue and the red line going sideways over 80 for 3 days or more. Today's the first day. So I'm in an overbought market in a resistance area where I think the pros are taking some money off the table, not getting bearish, not saying that at all. When we come to the NASDAQ, tomorrow's going to be the key day. We have, with today's close today, yesterday, both numbers over 80, not the day before. Excuse me. So as I'm looking at the market, the key is not to get back under 93.30 and to not break so much where you keep the market from embedding. If it embeds, it's no guarantee that it's going up, but it is a sign that the market has gotten out of the overbought condition and it's looking for reasons to be supported on breaks and even rally to new highs. That's at least how I interpret embedded. When we come to the Dow Jones, you can see that, like the other indices, higher lows, higher highs. Again, yesterday's test of that line in the sand, as I call it, that 18-day average, had followed through to it today. What would turn the trend down here? And yes, this trend can break into a downtrend. What? Don't take out these highs that you just made there to there, but take out 28,850. You could end up with lower highs, lower and low. Momentum, if it then started pointing down, could say a bigger correction's happening. What I use this for is to tell me what number I don't want to see hit if you're getting bullish. That's all. Overbought condition. I'll let you decide what to do with that. The Russell turned its trend up as well finally. Higher lows, higher highs, settlement over the 18-day average. However, any move under 1646.50 without taking out today's high could be a problem for this market. You could end up with lower highs and lower low, putting into play these numbers. And in the cash VIX, the market's into that support that I mentioned the other day, the 18 to the 100-day average of closes. Trend is down. To negate the downtrend, you got to get back over 1643, and resistance is right here. The market's unable to settle under that 18-day average. That number is 1515. We closed 1518. In the T-bond market, we've got a pattern that's divergent, might be the good word. You've got lower highs, lower lows. So the swing line is down. Momentum is trying to roll over to the downside, but as long as you're over the 18-day average of closes, the bias is up. First challenge of support might show up at the 18-day average where that comes in, and that number is moving about 5-6 points a day right now, as you can see. So I would expect it closer to the 160, 111, 12 zone there. In the 10-year notes, momentum is trying to point down. Like the bond market, lower highs, lower lows. So the swing line is down. The market is still over the 18-day average, so the bias is up. What the market did, and I called it for you the other day, doesn't mean I'm right, by the way, you lost the uptrend. What will turn these trends back up? Let's go back through this. Take out yesterday's high without taking out these lows. You could end up with higher lows, higher highs. If I come back to the bonds, same thing. Take out yesterday's high, you could have higher lows, higher highs, putting into play the upper Bollinger Band. So you're always looking at a market from both sides to see where you're at. Doesn't mean your best laid plans will work, but it gives you an idea. Now, one of the things I was saying as we were going up in the dollar index, you had 1, 2, 3, and this day, 4 closes in a row over the upper Bollinger Band. My rule of thumb is 5% of the time, I didn't create this rule, this is part of the Bollinger Band rule, 5% of the time the market will close out of the bands. I count each consecutive close as taking away one of those percentage points. So with 4 over, there was a 98% probability the market would close back under the band. It's not a sign of weakness. It's simply that maybe there's a better spot if you're determined to be a bull to come in. You still have the higher lows, the higher highs, and you still have the embedded reading. Therefore, I'm still on the bull camp. In the bear camp in the eurocurrency, you have an embedded reading. All I'm looking for here are bounces in the market. I think the pros are still selling this market short until the red line closes back over 20, the flip-flop of the dollar. In the Japanese yen, the trend turned down today. You have the lower highs, lower lows, but you're in terribly oversold condition. So if the market can continue to the downside, maybe it can get to that lower Bollinger Band. It can always go lower if there's some news. But what would negate the downtrend? Taking out yesterday's high, and that number is 91.43.5. In Bitcoin, I'm going to repeat that I think the traders, the people that are Bitcoin followers, maybe that's the right word, I think they're all about this halving event that's going to take place. And as that takes place, they've taken this market already up very, very dramatically. It was down here about 7,000 plus. Now you're at a 10,500. You have the embedded reading. You've got the trend up. You're paying attention to Bollinger Bands. You hit them, you back off. This market's not getting out of its own realm. It's acting good. In the Brent versus WTI for the April contracts, there'll be a number where you're too cheap. Is it the 350 level you hit yesterday? I have no way to tell here, but there'll be a number. I'm not convinced that Brent isn't going to carry a premium to WTI just because of world events. Now, we still have the bearish embedded reading. You know what that means to me? It means that until that's lost, the pros are selling rallies in this market, and it's still in a bear trend, still has downside bias. You have to lose that embedded reading to get me thinking different. Same in the WTI crude. I'm still in the bear camp. If these markets want to accelerate, the lower Bollinger Bands could come into play. Obviously, if you take out the last swing line highs in either, my eyes will be glued. Are you losing the embedded reading on it? Gasoline has lost its embedded reading. Now, this market closed today basically unchanged on the day. When you lose that reading, it is not uncommon for price and the closest moving average to try to come together. It is certainly a sign that I use when I'm analyzing a chart as to whether I'd want to stay in the bear camp, and that would tell me I don't want to stay in the bear camp. In the Nat Gas, what do you think would be a number if you're breaking like this that I would be telling my subscribers, because I do put up my written updates in my morning subscriber video, that I want them to take money off the table. The first challenge of a Bollinger Band, if it happens, certainly. And it hit it today, got to 179.20, finished 182.30. No. What is the trend? Well, it's still overall down, but you've had this pattern of a higher high, lower low, and you lost the embedded reading. As I said, there's sometimes when you just don't want to be involved. This happens to be one of those markets right now. We write about this. We talk about it. As you know, I put out a morning subscriber video that if you've never tried it, you're welcome if you go to our website to do so. You also can try our Spider ETF video that we put out. It's already published, by the way, on the website. I record it right after 3 o'clock. By the time I'm through talking with the guys in my office, it's about 4, but believe me, it takes about 10 minutes for me to finish the thing up after I finish recording it, and I can put it up. But we write a lot about futures. Now, this, if you're an ETF Spider guy, you may not want this. You might want the financial part of what we're doing. But it certainly gives you an idea about energies, the financial markets from a futures market point of view. Why is that important? Well, ETFs, Spiders, generally are looking at what's going on there. It makes up a large component of some of them, certainly not all of them, but some of them. So how do you get this and try it out? It's simple. Go to our website. Under it, you're going to see our free trial offer. Click on the ones that you'd want. You can always call my staff. They'll have you set up in minutes. They'll be here in the morning. They all go home already. And you can click here if you'd want to get there as well. That'll take you right to the free trial page. I'm Ira. You have a good day. I'll see you tomorrow.